Hi, everyone. I'm just going to give people a few minutes. A few minutes. How about 45 more seconds to plop on in? And while you're doing that, I am just going to check in on a couple of my items here. Okay. Hi, everyone. My name is Linda Griffian, and I am the Education Programs Coordinator for Business Link. Thanks for joining me today. I am going to start by getting us to where we need to be. And do you want to start recording, Julian?
Yeah, the recording is it's going right now.
Beautiful. Okay, so today we're going to be talking about financing fundamentals. Thank you for joining. My name is Linda Griffian, and I'm the Education Coordinator with BusinessLink. I'm here to guide you through the essential steps and considerations for obtaining a business loan. Before we begin, I'd like to complete our land acknowledgement. Here at Business Link, we acknowledge and respect that we are on traditional land, meeting ground, territories, gathering places, and traveling routes of Treaty 4, 6, 7, 8, and 10, and the home to many First Nation, Métis, and Inuit people. In the spirit of reconciliation, we acknowledge the lands of those who've come before us, reside here now and in the future. All right, and while we're doing all of this fabulous work today, I wouldn't mind if you could head on over to chat and let me know what stage of business you are in. So you can head on over to chat. You can let me know what stage of business you are in. We've got a 3+. We have a 3+. Okay, we've got some 3+s. Anyone in 1 to 3 or startup 3+? My gosh. Plus, ready to launch, startup. Okay, so it's all over the map. Awesome. Who here has applied already for some sort of financing for their business in any capacity? Have you done it? Let me know. Stick that in chat as well. And have you been successful when you did it? Tried once a year ago. So who was successful when they tried? Nope. Okay. Tried and denied. Okay, that is the story of an entrepreneur's life. um, just a little background on me so that you know I'm with you and I feel your pain. I've owned my own company for since the early 90s. I had a startup in the early 90s, which I sold in late 1998. And then I started another company in 1998, which I still have today. And throughout the course of my entrepreneurial journey, I tried and denied many, many times, but in recent years, have learned all the ins and outs to be able to acquire large amounts of financing for my own business. So we can have a little chat about that. Yes, secured a government-backed loan. Oh, nice. Okay, I'd love to know where that one's from, Brandon. If you want to type that in, a government-backed loan, is that the small business loans for commercial space? There's a few different ones that you can get for that through BDC, maybe that kind of organization as well. Okay, so for those of you who are trying to obtain financing, we're going to talk a little bit about what the objectives are for today's session then. So today's session is about understanding the difference between lenders and investors, understanding the 5 C's of credit and what your bank is looking for. We're going to talk about the 4 key ratios used to measure your business performance, how to prepare that winning loan proposal and how to choose the right loan, and how to access other types of funding. We're going to be using the BDC Entrepreneur Toolkit. So for any of you who are not familiar with the BDC, I'm going to pop us on over there now. And let's get to the Business Loan Toolkit. So we're going to be talking a lot about that kind of stuff today. So I'm going to copy this URL and I'm going to paste it into chat so everyone can get into that. Entrepreneur Toolkit. So who's familiar with the BDC? You want to just pop into chat if you know who the BDC is and what they do. Let's see what we have. Yes, you are. So the BDC is a crown corporation. It is the bank for entrepreneurs in Canada. Every G7 country, with the exception of the US, has a bank for entrepreneurs to help basically fuel the economy through entrepreneurship. That's really what the mandate are of these banks. So you don't walk into this bank and open checking accounts and savings accounts and things like that. This is a bank that provides lending and funding for entrepreneurs. Typically, this kind of organization will not fund your startup. Okay, so they're going to not be a startup funder so much as they are a funder who will take a look at you after you've been a couple of years in business. Okay, so that's basically the Business Development Bank of Canada. For about 4 years, from 2016 to 2020, I worked as a small business advisor with them, and we managed a number of advisory projects with a team across the prairies, helping fund and support and advise small business owners. And so I did a lot of work with this team for the small business launches of advisory services and programs here. One of the great things about their website is that there's so much information here on strategy, planning, HR, anything you need to know about small business is captured in their articles and tools section, captured in their business toolkits, their entrepreneur toolkits, lots of great downloads. It's your tax-paying dollars at work. So I highly recommend that you take a look at the business loan toolkit. And we're going to be talking about a few other links to gather here as well. Here's another one I'll put in here. How to get a business loan. We're going to top that into here because this is great resources for you to understand ratios, things that your banker is looking for. One of the reasons your banker is saying no to you is because you're not necessarily understanding what your banker's looking for. So it's key that we talk about that today. So getting into banker speak and understanding what your banker is looking for so that you can be providing them with the information they need to get your package together with you and work with you. Banks make money when they lend. So they actually really do want to lend to you. The difficulty is they're not very good at telling you what it is they need from you or helping you understand the expectations of what you're supposed to provide. So they end up saying no a lot because that's what they do. They do the lending, but they don't necessarily do the educational pieces of it. So we're going to talk a little bit about that today. So on that note, let's start with some key pieces, which are going to be basics of financing. I'm going to play a short video for you that we have on our website. We'll watch that, and then we'll talk a little bit about some key pieces that we can work with.
Many business owners find it hard to ask for money for their small business. It's time to discover how the process works so that you can be successful. Knowing how to talk to lenders and access funds for your company is key to long-term growth. Developing a good relationship with one or more lenders ensures you have a financial partner there to assist you every step of the way. Believe it or not, lenders want to help you. Lenders will assess your business using the 5 C's of lending. They are capacity. You'll need to show that your business can generate enough cash flow to repay a loan. If you're a startup business, a solid business plan showing financial projections is necessary. If you already have a company history, your lender will review past financial statements to assess this. Capital. Are you able or willing to invest your own money and time into your venture? At startup, personal net worth and contribution show lenders that you are serious. Conditions. The amount of interest charged, length of time to repay, and other requirements will be discussed. Be prepared for lenders to ask for annual or semi-annual reviews of your company performance once you receive the loan. Collateral. In some cases, lenders will use your assets or assets owned by your company, such as company vehicles or equipment, as collateral in the event the loan cannot be repaid. Character. Do you have the management skills and experience to operate your business? Your first impression counts for a lot. Dress for success when meeting with your lender and arrive prepared. You can prepare to meet as many of the criteria for the 5 C's of lending as possible. Here's how. Step 1. Know yourself. What level financial risk are you comfortable with? Borrowing money comes with a repayment cost of principal and interest. Take time to calculate your personal net worth. Compare your assets against your debts. Do you feel comfortable adding more debt? You are the manager of the business, and your credit history matters. Check your credit report, understand your credit score, and be prepared to answer questions about your personal credit history. Your character and capacity can be based on this information. Order your credit report from Equifax or TransUnion. Along with your ability to repay the financing, a lender will assess other aspects of your character. Update your resume or write a brief personal biography about your industry experience. You can include this information in your business plan. Work with organizations like Community Futures and BusinessLink to build a great business plan. Step 2. Be clear about what you're asking for. How much money do you want and what will you use it for? Are you purchasing equipment, updating technology, hiring employees, changing your marketing strategy, buying more inventory? Your stage of business, the amount of money, and purpose for the lending need to be clear. Understand the costs and present a clear explanation for the lending request. Step 3. Research your lenders. Traditional lenders, such as banks and credit unions, aren't your only source of funds. Nonprofit organizations, government agencies, venture capitalists, and angel investors are all part of the non-traditional lending landscape. Some of these lenders have programs designed for specific needs. Others direct funds towards specific business sectors, and others may be based on how you identify as the business owner. Knowing who you are and exactly what you're seeking funds for helps you research lending partners who fit your criteria. Lenders know one another and may partner together to complete deals for their clients. Community Futures often partners with lenders such as BDC, Alberta Women Entrepreneurs, Futurepreneur Canada, and others to help business owners access funds. Reach out to the Community Futures office in your region so they can help you create a strategy to approach the right lenders at the right time. Step 4. Organize your documents right away. Lenders will ask for proof that your personal and corporate taxes are paid up to date, your existing payments for equipment and payroll are being met, and you have any agreements with vendors and suppliers on hand. A few common documents include 2 years' notice of assessment, personal and corporate, copies of the most current credit line and credit card statements, company financials, and projected budget. Step 5. Coordinate your team. When it comes to applying for money, the right team will help you organize your documents quickly, prepare your pitch effectively, and access the marketplace of funders waiting to hear from you. Your bookkeeper and accountant will work with you to make sure all of your current personal and company financials are available. Your bank account manager can help you review your personal net worth statement and credit report and connect you with other lenders. Local organizations such as BusinessLink can assist with research, education, and planning. Community Futures provides business planning support and funding for many business projects. You're not alone. Reach out to BusinessLink or Community Futures and get started now.
All right, so that was a fair amount to take in. Let's talk a little about who in the session today who has attempted financing or to obtain financing before has actually gone out and researched the lenders prior to sitting down with them to talk about financing. Hi, Riley. That's great. Thank you. It's a big piece of what you're doing because lenders are different. Lenders are all different. They have different criteria for their lending. Some will do asset-based lending. Some will do lending that's just to you personally. Some are more inclined to lend to small business. Some lend locally. Some will only lend after you've been in business for a few years. Others are lending to you based solely on your personal credit, to be blunt. So that's important. It's important to understand what is this particular lender all about. So really understanding that. Also understanding the difference between lenders and investors. Who in the group has investor in their company? If you are incorporated and you own shares in your own corporation, you are an investor in your corporation. So hands up if you own your own corporation and you have shares in your own corporation. Okay. Someone here has a company that's 100% shareholder in another one of their companies. So you have a holding company who's the investor in your new startup. So that's you, Troy. Yep. Brandon, you own your own corp. That means you're the shareholder in your own corporation, alongside being a director. So directors are not the owners of the corporation, just to clarify that for folks. Shareholders in the corporation are. So when we talk about lenders and we talk about investors, lenders are the folks who provide the loans with the expectation of being repaid with interest. Okay, so they're going to assess your ability to repay the loan, and that's what they're looking for when they're vetting you for a loan. Is they're taking a look at your ratios, they're taking a look at your numbers, they're taking a look at your credit history, and they're assessing based on all sorts of criteria whether or not you're going to be able to pay the loan back with interest. That's the only criteria they really have. The one piece of criteria they'll also have is that you are vested in your company and you've put some skin in the game. So everyone who's going to invest with you, LLC, we do not have LLCs in Canada, James. Yours is either a limited LTD corporation, it's either a general partnership, an an LLP, or a ULC. We can have those in Canada, but LLCs, James, if you've got one of those, that's a American state-based corporation. Yeah, LTD, absolutely. We don't have LLCs in Canada. That's a tax-based system. So your lenders are going to look for your ability to repay the loan. In a nutshell, banks, credit unions, and those types of financial institutions, along with the BDC, are looking for your ability to repay the loan. That's it. So when you're talking to those people, you need to be preparing your financials, understanding your ratios, and explaining to them why they should take a chance on you because of your ability to repay the loan. So you're going to have to present them with some compelling numbers in order to drag a little bit of money out of them. They're also going to take a look at your credit. So if you've been in business 3 or less years, your business itself, especially if you're not incorporated, if you're a sole proprietor, but definitely your business, if it's less than 3 years old, won't have a real credit history to it. You'll have a credit history. So when we talk about credit history, the investors are looking at your credit history. So if you've never taken a look at your credit report or you haven't adjusted for that before, head on over to Equifax.ca or TransUnion.ca and get a copy of your credit report. You should be doing that every quarter as a business owner anyway, checking out what's going on with your credit score and your credit report, because that is a vital piece of information that every lender uses for every reason under the sun. And you don't want to let your lenders pull credit scores on you consistently. You want to be very careful when you're shopping for credit as well. So lenders are looking for that. Investors are looking for some other things. They're providing capital to you in exchange for equity or ownership in your business. So they want some shares in exchange for the money that they're giving to you. So when we talk about tech startups and angel investors and those types of people, they're looking ahead for a big return on their investment through the ownership in your company. So they may plop lots and lots of money into your corporation and into your company in exchange for betting on the fact that there's going to be an exit strategy there where they can cash out in the end. They don't expect regular repayments like lenders do, and they look for a share in equity and profit. So I have shares, investor has shares. Okay. If you own a corporation and it's a spousal thing, your spouse probably has shares and you're sitting down with the accountant every year because there is income splitting benefits to owning shares. So her investment or his investment in the company, depending on your spouse, is going to be all about income splitting and tax purposes and not necessarily about pure investment and return on investment from an investor standpoint. So investors are going to be those folks who you bring in and you issue out, hopefully the non-voting shares to, or the preferred shares to. You can't always coordinate that. It is not as common, especially if you're a small business owner and you're starting a traditional sort of small business. You're not necessarily going to have a lot of investors knocking on your door to invest in your business. It's much more popular in the tech startup world. If you're starting food service companies, land development companies, that sort of thing, where there's a real sort of drive for technology, or there has to be a very large investment because you're putting a lot of money into leasehold improvements and restaurant equipment and that sort of thing. So you'll see that there's particular sorts of organizations such as private equity firms, venture capitalists, and angel investors, and you can research them as well. If you think you have a business that is going to appeal for that kind of investment, do some research on who are the angel investors in the private equity firms and the venture capitalists in Canada and Alberta who are out there providing that kind of investment into companies, and what are their criteria, because your type of business may not meet that that criteria for them. Okay, let's talk about the 5 C's of credit. This is essential for you if you're seeking a business loan. They're used by every lender to evaluate the credit worthiness of you, the owner of the corporation, and you, the owner or the sole proprietor in your business. So they want to know about you, and they want to understand your history of repaying your debts, of when you are applying for mortgages and personal loans and lines of credit and TELUS bills and everything else. They're looking at that credit report to see what your repayment history is like. So this is your character. That's the first C. Do you have a track record for repaying your debt? It involves the credit history you have and your credit score. Capacity. So they're going to take a look at your ability to repay the loan by looking at, especially if you're a startup, if you've got some income, employment history, what are your current debts like? Are you going to be able to make enough quickly enough for those debts to get repaid personally, and for them to see you repaying the debt pretty much immediately? Capital. How much money did you put into the business? If you're not putting money into the business, why would anyone else want to put money into the business? So that is a key criteria for, we have a hand up. If you have a question, Darren, and you have your hand up, you can pop the question. If you look in the bottom, you can see a Q&A box at the bottom. Anyone who has a question wants me to stop. Oh, I don't see we have a Q&A, but you can pop the question into chat because we're not unmuting people for that. Collateral. So what do you have to have as security in your business? So for example, it's easy to get a car loan because your car is the collateral for the loan. You don't make the payment on the loan, they repossess the car. So that's the collateral for that loan, which is why anyone under the sun can probably get a car loan, a good credit, bad credit, no credit. Have you ever seen those commercials? It's because no one in that position cares about your credit. They know that if you don't pay the loan, they're just going to repossess it. And that's the collateral on the loan. They also know if it's a new vehicle, it's just going to depreciate a few seconds off the lot. So that's why they're able to do that. Good credit, bad credit, no credit. Car loans, that's the collateral for the loan. If you are in farming, if you are in restaurants, if you are in anything that is equipment heavy, that requires assets and collateral, that's what it is. You're saying, if I don't pay the loan back, you get to seize my equipment. So an organization such as Community Futures, which are all across the province, they give out collateral loans. So that's what when they're talking to you and you're approaching an organization like that, they are an asset-based lender. That's what those lenders are called, asset-based lenders. And they are going to want you to put up equipment, and machinery and all of those other things as collateral on the loan. And they're looking for the ability to seize that and get their money back from you in that capacity. Lenders are also looking at the purpose of the loan. So when you're going to see a lender, they're looking at the overall market conditions, they're looking at the economic environment, they're looking at the purpose of the loan. So is the loan for working capital? Is the loan for debt consolidation? Is the loan for expansion? What are you using the loan for? So a working capital loan is going to be different than an asset-based equipment purchase loan, which is going to be different than other loans. So you have to be very clear what it is you want to use the money for. So is it for my day-to-day operations and I need working capital because we're expanding and I have to pay an extra person to come aboard while we wait for our receivables to come in? Is this lending on those sorts of opportunities? So that's important to understand. So we have the character, your capacity to pay back the loan, the capital, so what you've put into the business, any assets and collateral they can seize from you, and what are the conditions for the loan. So those are some of the basics of the 5 C's of credit. So I'm just going to pause here, see if anyone has any questions here, but we've pretty much covered that, I think, for everyone. Awesome. What's your banker looking for? Oh, Melanie, you've posted a question. I don't see the question in chat. And Julian, our background person in the Q&A. Let's take a look in Q&A. We've got 2. Yay, off we go. Can land or property be used as collateral to start a real estate project? Absolutely. There's tons of lending out there that's all based on real estate. There is lending that the BDC does for commercial lending, and your bank will also do that kind of lending where they will back a percentage. You will have to still put a percentage of the value down. So if you're starting a land development project or a big project like that, you can put your existing properties up for remortgaging and refinancing on those, or you can finance the purchase of commercial property through the lending criteria that's done in partnership with places like the ATB, the BDC, and even your bank will do that type of lending where they will have the mortgage backed by the government. These are government-backed mortgages. And you will probably have to put about 30 to 35% down in terms of your own skin in the game. So that's your own collateral putting in your own money you're putting in. So if you want to use your personal property to finance other real estate projects, you're basically remortgaging your personal property to do that. You're not just saying, here, take my house. You're actually refinancing that. Then you're putting the money down on the commercial space that you're going to do there. What about service-based industries that don't have physical assets? Then what you're looking for, Melanie, is what's called a working capital loan. So when you're in startup mode, you're going to have to self-fund for a service-based business, and you'll be getting things such as lines of credit on your own personal assets and real estate, that sort of thing. So you won't have assets as collateral, so the asset-based lending is not available to you. What you can do is if you have computer equipment, you have vehicles, things like that, you can, for cash flow purposes, you can make sure that you're leasing any equipment you have, and that you have a loan out on your vehicle instead of having it fully paid off, because those are depreciating assets. So anything that's a depreciating asset, you want to make sure that you're not paying cash up front for, you're keeping cash in the bank for that, because they're depreciating and you want to use your cash for other things. Okay, so your banker is looking to see what your project's profitability and ability to generate steady cash flow is. So back to that service-based business, in my company, we were able to demonstrate we had positive cash flow, that we had profitability, that we had reinvestment happening in the company. So I too have a corporation, and rather than sucking all the profit out of my corporation, I reinvested in it and didn't take it out as dividends or income for myself, but left the income in the company and was able to show that we had enough income and cash flow and profitability on a service-based business to get about $250,000 out of the BDC in working capital. And again, that was lending them just on, at this point in my career, on just the company's credit. I wouldn't have been able to do that the first 5 years in my business. In fact, probably not the first 10 in the company I have now. We wouldn't have been able to do that. But as the company ages and as it shows credibility and as it builds and wants to expand, that's when those working capital loans become much more available to you. If you are in a service-based business, you may have to seek out other types of investment and other lenders. And we're going to talk a little bit about other options other than lenders and angel investors as we get closer to the end of this. But your banker, specifically any banker, no matter who it is looking for profitability and steady cash flow. And even when we look at some of the other programs and availability out there for you as a startup, because that's a tough place to be to get any kind of money, you'll see that a lot of those programs are expecting you to do 2 years of cash flow projections as part of your application. And a lot of those organizations, you're going to want to show that in the after the first 6 months, that you're generating positive cash flow in order to be really into those programs. Whoop. Question about cash flow. You are looking for future cash flow. You'll just break even in your first year. Do lenders expect a profit in the first year? Okay, so cash flow and profit are two different things. They're wanting to see positive cash flow quickly. A bank, in particular, typical bank lending and institutional lending, needs to see your ability to repay the loan. So they're not caring so much about profitability, they're caring that you can repay the loan. So they're looking for positive cash flow. That's the only way you're going to repay the loan. Okay. So cash flow and profit are two different things. Okay. If you are brand new, you're less than a year old, and you're applying to programs, and I'll talk a little bit about that, programs such as Futurepreneur. So say you're an entrepreneur between the ages of 18 and 39, you're about a year in business, and you are wanting to get access to mentoring and the financing available to you from Futurepreneur Canada, then they're going to ask you to complete a business plan. They're going to ask you to complete cash flow projections. And in that case, you want to show that your business has the ability to have positive cash flow after the first 6 months. So this is about doing a little bit of research on your lenders. Remember, these are projections. These are your conceptual thoughts about what you hope is going to happen in your business based on the plan you've put together for your business. So you don't know that you're going to get positive cash flow in 6 months, but you're telling this particular lender, I believe I am, and this is how I'm going to do it. And you're proving that in the business plan and the cash flow worksheet. What if you are repaying the loan from another job? Then your business is not a viable business. If you are using a job to pay back a business loan, you need to sit down and go through your numbers and determine whether your business is a viable business, because that's what your bank's doing. That's what economic indicators across Canada are doing. The business needs to be self-supporting. Okay. Just to be clear, from a business and entrepreneurial standpoint, all of us, and me included, have taken on jobs for projects or to expand the project, but at some point in time, past startup, you want to determine if the business is viable in terms of repaying its own debts from its own sales and its own revenue generating activities. If you are in a business that takes 10 to 20 years to build up subscribers and to build up a base, then you are in a technology startup that requires a lot of market penetration as fast as possible and a lot of investors who are going to wait for years for their millions and hundreds of millions to be returned to them in the hopes that the company gets evaluated at a high value at the end. But if you are in a traditional small business, you don't have the luxury of all of those lovely hedge funds and everyone else investing billions in you, waiting for that to happen for you. So that's an important piece to remember here is you need to identify what kind of business you're in. Am I in that kind of business where I can spend my time seeking out high amounts of investment from investors who are going to wait for it? Or am I in the kind of business where I need to seek out traditional funding and other sources of funding because I'm in a local, geographic, whatever type of business I'm in? So we've got some Q&A. We've finished the land and property. What about service-based business? That says there's older entrepreneurs. So that's me. Hi, Valerie. Welcome to Older Than 50. I don't know. I can tell you that at my age, lending was far more available to me over 50 than it ever was under 30. When I started my first company and I was in my early 20s, I was such not a believable entrepreneur to so many bankers and so many people that I can tell you that lending got easier as I got older. We'll talk about programs that are available, but we don't really have a lot of programs that are available for older entrepreneurs. The assumption economically in our country is that the older entrepreneurs have had years of either career development or they've been in careers or they've put together their own financial plans and they have equity and property and everything else that they can rely upon as the source of their funding through refinancing of those. So that's the challenge with in age related is that you are expected at a certain age to have accumulated your own personal net worth and you are drawing from your own personal net worth and taking a risk at that age. So there aren't a lot of programs for 50 over. So a good question, doesn't answer. Okay, building credit in your business. Yes, keep money in your business. So retained earnings. If you're in business and you're 3+ years and you want to get large amounts of lending, if you want to get it in the next year or two, you're already working with your accountant and you're already working with your banker to put the plan together to say, here is how we're going to access funding in the next year. And you're looking at all your financials, you are working through with your accountant and your banker together to say, what do we need to do in my financials here with my business to qualify for this working capital loan in a year? That's exactly the work we did in my company 2 or 3 years ago, where we sat down together. I enlisted the help of a BDC account manager. I enlisted the help of my Scotiabank advisor. I sat down with those people and then said, what do we need to do here in order for my company to access a large amount of capital? Here are the things I want to do. And I had them help me put the packages together for that. Okay, so you sometimes have to plan, well, most often have to plan it out. So if you're in expansion and you're 3+ years in business, you're already looking ahead to the next 2 to 3 years and planning your expansion and your growth. You're not backtracking at this point. You're looking ahead. If you're in startup, you're looking at what is the big pile of gold coins I can sit on here and amass in order to be able to support my business startup in its first year of not being profitable. And in most cases, that's your personal finance along with any kind of lines of credit and other types of lending you can scrape together from your traditional banker and a few other government programs. Okay, you're getting that pile of cash together to do that. You're doing it while you're new and while you still have a good credit score and while you can still show that you had income because all the lending is coming to you personally. So they want you to be able to repay it. How you present yourself at the bank is important. And I'm just going to plop in a video that we'll just put it in the chat. This is a 45-minute video about being prepared to speak with your banker. Also going to, Julian, can you see my BDC screen? I just want to make sure everyone can see it.
Hi. Yeah, we can see it right now.
Awesome. Here is the other great information you need. What you need to learn in order to get your loan. So what 6 questions your bank's going to ask, what ratios they want you to have done the math for, getting help negotiating your loan, and boosting your credibility for a business loan. It's all in this package. So we have that for you. Let's talk about the ratios. What are the 4 ratios you need for your business? Liquidity, activity, so the efficiency of your business, the profitability, what you can leverage in your business. And in this one, let's stick this one in. You can also download the how to do the math ratios. Sometimes you won't have choice in interest rates. The BDC, for example, is a very, very high interest rate. It's a minimum 5 plus a floating on the base rate. It's not cheap money because they will lend to you and others won't, especially if you're in the 3 up and you're not having any traction with traditional lenders. The BDC is probably going to be a good lender for you, but be aware the lending rates are higher simply because the risk is higher. No one else is lending to you. So sometimes you have to make the choice of high interest money or no money at all. And you have to weigh whether that's worth it for your business or not. And for many businesses, it is. It's worth it if you need to grow and expand. If you've got that big contract in, and I saw someone earlier say, what if you win a big contract, but no great cash flow? Then this is the lender for you if you're 3 years and up, because you can get 100 grand on an online application to do working capital. That's your working capital loan. So that's the loan you get so that you can order the inventory, so that you can get the people in place and you can get the manufacturing and operations in place to fulfill the orders on your big order. So that's what you would do in the case of getting invoice factoring. Yes, but that's a last resort. You really have to get good at collecting your accounts receivable for cash flow purposes. There's all kinds of creative ways in your business to do that. Get good at collecting the money. Get good at taking deposits up front. Get good at making the collections happen. Get good at understanding who you're working with and not holding your clients' credit for them for very long periods of time. In some cases, you don't have a choice because you're working in industries, often in construction and things like that, where you have bridge financing and you're paying for materials up front and you're doing all of that. Home builders have these issues with that. There's lots and lots of ways to get lending for those types of situations. So again, back to the question, what is the lending for? Yes, Victor, Futurepreneur. I used to be their entrepreneur in residence back from 2011 to 2013. They will work with you if you are an entrepreneur between the ages of 18 and 39, and at least 50% of your business is owned by what we qualify as a youth entrepreneur, which would be you if that's the case. They're all across Canada. The lending is BDC funded lending along with mentorship. And in the case of that program, that's a tricky one. I used to teach the entrepreneurs there. What you want to do is you want to download their cash flow templates from their website. You want to put together your basic business plan, and you want to make sure in your cash flow templates and projections that you're showing the ability to start repaying that Futurepreneur loan after 6 months. So that's my big tip for you with Futurepreneur. Okay. Here's your ratios, things you need to know. So it takes work to get money. Work with the people who are going to help you succeed. So who are the people who are going to help you succeed and help you write the winning loan proposal for your business? That's going to be your existing account manager, your commercial account manager. You're going to sit down with them and say, okay, I've been told no. I've been told no on this money. What could I be doing differently to get yes? to get to yes. So whenever someone says no to you in the lending world, the next question you ask them is, I understand you said no to me. What is it I need to do to get a yes from your organization? And that's how you find out what they're looking for. There's lots of ways to find it out, but if they've said no to you, you need to go back to them and say, well, it's a no. What do I need to do to make it a yes? And they'll give you a long list of what you need to do to make it a yes. And that's when you sit down with your accountant and you put the plan together. Your accountant is not the person who files the taxes for you only at the end of the year. The accountant is the person who you're paying good money for. They work for you and they are doing forward thinking and strategizing and projections and that kind of work with you. And you're sitting down with them at least quarterly and talking about your plans and your future growth and what it is you want to do in your business so that you can put together the financial statements you need to put together and work with the accountant to understand where things need to go in those statements to show the banker what they need to see so that you can get from the banker what you need to get from your banker. Stay in touch with your account manager. Your banks work with other banks and know lending programs behind the scenes that you don't know about. They'll put package lending together. They'll say, well, we don't necessarily lend this way, but we're partnered with BDC or we're partnered with ATB or we're partnered with this small business loan organization or whatever to put a package loan together for you. So if someone has said no to you, you find out what it takes at that organization to get a yes, and you work with your accountant to get to yes. That's basically what you're doing as a business owner. Let's take a look at Q&A. Okay, we're done there. Prior to discussing expense and growth loans. That's Chelsea, the question you're asking about, you're running as a sole proprietor for 8+ years. Do you recommend incorporating? I cannot make that recommendation for you, even though I own a corporate registry and we incorporate thousands and thousands of companies across Canada and the US. I can actually not recommend which of those two options is better for you. Your accountant, on the other hand, this is why you're sitting down with them. You were sitting down, Chelsea, with the accountant saying, this is what I plan on doing. Should I be thinking about incorporating now so that we can build up a history with my corporation? Because a corporation is a brand new person. You're starting fresh from ground zero with a corporation. So you may have had 8+ years as a sole proprietorship with numbers behind your name there, but your corporation starts out as a brand new person. So don't jump into that hot pool until you've had some accounting advice and tax advice there, and that you're really having a conversation with your accountant about, these are my future plans. This is what I want to do in the future. What are the things I need to do now to get there in 2 years? Okay, that's what you're really starting to do. Okay, 2 issues. Company is not open long enough, or 2, my personal is my own great profit already with 7 months open. Tasha, where can I go? You need a payroll float. Okay, so you're profitable. Can you use your CPA to present your story? You use your CPA to help you provide all the documents to your banker. So you're working with your CPA. The banker wants to see you show up. So watch that video. You need to show up and be present and have a relationship with your banker. Even if you don't need money right now, you go in and you develop a relationship with your account manager. Okay. That is the most important thing you can be doing when you start out in your new small business. You start to develop that relationship with your banker already day one when you open the bank account. You express with your account manager what your business plans are, what your challenges are. You even invite them over to your location and say, come on out and let's have a coffee. I'd like to take you for coffee, or I'd like to do this. I'd like to go to the bank's networking events. I'd like to be involved. Okay, because they get to know you, and then they may tweak on you because their job is to sell you more products. So if you're in touch with them and you're keeping them abreast of what's going on in your business, they're making notes on that. Their job is to sell you more products. That's what your account manager's job is. So your job is to say, how do I get this product from you out of the bank? Because I know your numbers for your own performance reviews are based on this. Let's work together and figure it out. Okay, that's what you want to do. Your CPA is the person who's explaining to you behind the scenes, these are the numbers and challenges we need to look at. These are the things we need to do together. Okay. That kind of thing is going on there. Yeah. Okay. Lots and lots of stuff. Okay. I know everyone is like, no one wants to lend. There's gatekeepers and if you are profitable, and I need you to take a look at your cash flow statements to see if it's a cash flow problem. Okay, profit is the money left over at the end of the year that you're being taxed on. So if you're profitable but can't pay the bills, you have a cash flow problem. And many, many, many profitable businesses are bankrupt the next day because they don't have cash to pay their bills. So don't look so hard at profitability in lending. From a lending perspective, look at cash flow. There's a problem with cash flow. Okay, work with your banker to identify that, work with your accountant to identify the cash flow problems. There could be any number of reasons for it, but you need to look at that. You need to do the work behind the scenes with all of these tools that I'm telling you about, because your bankers and your bank account managers and your lenders, their hands are tied with lending criteria. The lending criteria is what you need to know from them, because they're saying no to you for a particular reason. If you have an account manager who's young and experienced, they've been there for 2 months and don't know anything, you ask for the senior account manager and to speak to someone else, or you go to a different bank. In Canada, they're all the same damn bank, except for maybe ATB and BDC and a few credit unions. There's some differences there, but the big five are the big five are the big five. It's all the same shtick out of all of them. The key to unlock the doors at the bank is developing that relationship with a good account manager. That's what you need to do. So if you're not able to do that at your existing bank or where you're banking now, you walk on in as the entrepreneur that you are, and you say to them, I am not feeling the love from this bank. I am not feeling the love. I have to call in advance, book appointments. Everyone's behind screens here and no one wants to meet with me. I would like to be working with someone who can work with me so that we can utilize better the products and services of your bank. And the only way I'm going to do that is if I can meet with someone who I can talk to about that. And you get proactive. And if they're not doing that with you, move on. There's a zillion banks. Okay. We hold government contracts which take 4 to 6 weeks to pay out versus payroll every 2 weeks. Okay, so you need a working capital loan. Head on over to BDC and apply online for that $100,000 working capital loan. And you need to be thinking about how those contracts are working and evaluating different ways to work with those contracts. Maybe get some advice, Victoria, from your accountant or other people in your industry who are tackling this same issue, and find out how are they managing that issue. So especially if you're in a business where you have 4 to 6 weeks of waiting on your receivables while you have to pay your staff, you need to be having that constant backup cash flow sitting behind the scenes for you. So you need to talk to your accountant and people in your industry about how they're managing that flow for that particular piece. Okay, you are not alone in the world. Okay, yes. Everything we're talking about is on the BDC website. If you go to the bdc.ca website and you go to Entrepreneur Toolkit, or you even type in the search box, any kind of question you have, it's all in here. They have webinars, free courses for you to take, templates to download, financial tools, get to know this website. Okay. I'm planning to help with the hands-on work during startup. Should you? So, okay. Pat, I don't think your bank cares as much about your product as you do. what your bank wants is to see that you can repay the loan. So you can bring it in as part of an overall thing, but what your bank wants to hear from you is, here are our financial statements. So what does your bank want? They want the plan, they want the financial projections, they probably want a small budget, they want a proposal, they want the past 2 years of financial statements along with your income tax filing showing you've paid your tax bills. They want to see these ratios. They're going to work through the ratios with you, and that's what they want to see from you. Bring along a sample, bring along some gummies if you're in that business, liquor them up if you need to, but you also need to be getting the what's it and who's it's and these topics done with them as well. So don't just come with, here I am and here's my idea. No one cares. You have to come with, here's what we're working on, here is the money, here is where it's not happening. Tell them the truth, show them the business plan, and get those pieces done, and work with the accountant. Yeah, bring really strong gummies. Gummies for sure. Okay, so we've talked about traditional lenders. We've talked about all of that kind of stuff. We've talked about investors. You know that what you need to do is you need to research who these lenders are. You need to prepare. Go to this guide, How to Get a Business Loan. You need to prepare these things. If a bank says no to you, you need to ask them why they said no and what you could have done differently to get to yes. Okay, and here are some alternatives. Okay, we often talk about grants and all of that kind of thing. Let's be real about grants. Grants are few and far between, and grants are not always the answer, but there's lots of other programs here. So I'm going to paste this link. Everybody grab this link that's in chat. Okay, this is the Government of Canada Business Benefits Finder. This is why it's important for you to know yourself and what you're looking for and how much money you need. So you just go to the site and you fill in the blanks. I am looking for what for my business? Let's say all support. What the hey? What is your goal? How much money? Try to get singular here. Maybe it's 20,000 to 500,000. Okay. What are you looking for it for? Are you doing research and development? Are you starting or buying a business, buying or leasing? You may have a few of these here. So can we control it? Yes, we can. You want to sell internationally. So there's programs for all of these things, but maybe it's to start or buy a business. Maybe it is to increase your working capital, now that you know what it is. And maybe it is to buy or lease equipment or property. Let's leave it at that. Next. Okay. We're in what part of the world are you in? Alberta. And in the business of what? This is where you self-identify yourself. What kind of business are you in? If you don't know, if you're not in these and you don't know, just hit not sure. But as we go along, the more clear you can get about who you are, the fewer your results become, and you want fewer results, okay? Because you don't want to see every program out there. We have X number of employees and your annual revenue. So this is the gross revenue you're taking in. So if you're in a startup, you may be here. Okay, we have, maybe you have 5 employees. We are looking, are you incorporated, not incorporated, not sure? Let's just put not sure. And let's go, are you for profit? Yes, if you're in business, you're for profit. And we are looking for programs that support businesses owned by. This is also, we have lots of programs. Someone said above 50. You'll see that 50 plus is not listed here, but are you Canadian, Indigenous? Are you a Black Canadian, other racialized person, women, language? Because there's programs for all of these groups of people that run. Not sure or prefer not to say, that's fine. But the clearer you can get, the less your results are, and you don't have to fish through 328 results. This is a big one. Only programs accepting clients. See how that dropped the number to 305? See your results. You take the link that I put in chat and go do this element. So here are book publisher business planning, funding for projects in the book industry, funding to create more accessible safe spaces, loans and capital. So these are the loans and capital investment portion of the program. Loan for small business owners, financing for young entrepreneurs, loans for immigrant entrepreneurs, term loans and lines of credit for small business. All of these things are listed here. Once you click them open, you need to find out what are their criteria. Are you going to fit their criteria? What do they expect you to submit as part of your application to the program? So you're going to have to do that work. Next. Okay. White male over 55. The reason we don't have programs for older Canadians or non-racialized Canadians generally, or that sort of thing, is because systematically, if we look across the landscape of the history of how people have integrated into entrepreneurship and business in general, the vast majority of the entrepreneurial landscape up until the 21st century were men in business. And I can tell you that as a woman in business in the early 90s, where none of these programs are available, when I walked into the Chamber of Commerce, that was the program for males in business over the age of 55. If you looked at the pictures on the wall at the Calgary Chamber of Commerce, everyone in that room was a male over 55 in business who had been successful, because that group of Canadians were generally the people who were doing that sort of thing and had networked together and banded together to form organizations that helped one another. So as a member of the Chamber of Commerce in the early 1990s, I was one of the few women there, and I had a great deal of help and respect and success, and men who helped me in my business journey, who were gracious and generous to me and showed me and mentored me into how to run a business. Those were the people running businesses, and there were no programs for women in business at the time, or youth in business, or Indigenous business owners, or disabled business owners. And I actively went out and sought the help of those people and joined their organizations and became part of those organizations to leverage the learning from the many, many years of inspiration and success that those men in business had. And I was able to leverage that and build a successful woman-owned business and learn all of these tools and tricks and pass that along so that we could have a plethora of different types of people. And that's what we're doing. We're continuously sharing, and we're continuously opening the doors for wider ranges of people. So if you don't see a program here that is designed for you, some of the programs out there for men in business are the Chamber of Commerce, the Ranchmen's Club, the Petroleum Club, the golf tournaments, and all of the other networking opportunities that have been there already to network in and generate investment. And those were the groups of people who invested in each other's companies and invested in the success of that. So just to be mindful of the fact that all of those resources already exist for you out there. You just have to join the Rotary Club, join the Chamber of Commerce, join Toastmasters, get involved in your local community, the Lions Club, the curling arenas, the community clubs, and you will be networked in with groups of people who are starting their businesses, running their businesses, and can lead you to other resources for your business. So those are important. Aspects to being a successful entrepreneur is network in with people who are like you, but also network in with people who aren't, and learn some of the skills of how to be a salesperson for your own business when seeking out investment. And find that out from people in those groups. Get involved that way as well. For the first time, it's no longer the 90s. Oh, I know, but you know what's happened now? Just this dates me a bit, but when I was a new entrepreneur in the 90s, and the first company I had was a courier company, and we specialized in process serving and courthouse filing and doing all the running and stuff for law firms here in Calgary. And just running around the city in my little old car and standing in line at the courthouse and serving people their divorce papers and everything out of pizza bags, I just networked in just randomly because I was out and about in the world all the time. And then when I started the second company in the late 90s, we were still all out and about in the world networking. You would walk up the street, you'd bump into people. We were really out in the world randomly connecting. And that's a little lost in our digital age where we're not randomly connecting like that anymore. We do a lot of connecting online, but it's a little less personal and it's a little less in depth. So if you want to deeply connect with other entrepreneurs, and we're just starting to see that come back post-pandemic, I encourage you to head on over to Meetup, join some Meetup groups, and get out and network. If you're looking to build your presentation skills or you need to make sales calls, join your Toastmasters club. I did. Toastmasters is a great way to meet other entrepreneurs learning at the same time as you or other people in business. Find a common cause. The Rotary Club is another great space. Business Networking International, the list goes on. Get networking and out in the community and out of the basement. If you're working out of the basement of your home, get out. And get really engaged with that. Go to the ATB Entrepreneur Centers. They have lots of stuff happening there as well. But really, from a nuts and bolts, I need to get the money standpoint, it's a combination of that networking that you're doing, and it's a real big step back to go and get onto the BDC website and get to that package that says how to get a business loan. That's your guide, the topics covered. This will really cover off those topics of ratios and numbers and needs. When you find out what programs you may or may not qualify for with the business benefits finder that I just showed you, contact those programs, send an email, review the website, and find out if what they need to see prepared from you in order to successfully apply to that program. Okay, I'm going to check the Q&A box. Looks like we may have a few more. We've answered that. There we go, back to this. Oh, if you're disappointed with your account manager, you know what to do. Fire them and go somewhere else. That's my recommendation on getting a positive bank experience. Can a Canadian citizen living in Mexico only purpose is really Mexico? No, Irene. BDC will only fund Canadian projects. So hopefully that's done. You will have to seek outside investors and maybe form a limited partnership, an LP, and get joint investment from actual investors. Banks aren't going to touch that sort of thing unless you are a long-standing developer. Okay, I think we've got them all. Okay. Thank you, everyone, for coming today. Appreciate your time and running overtime as well. Have a fabulous lunch. And thanks, Julian, for running overtime. And this recording will be posted to our YouTube channel. So head on over to the BusinessLink website and head on over to the BusinessLink YouTube channel. And this recording will go up in the next 2 to 3 days. Thank you, everyone.